And he's here to talk about Michael Kors, who has had a great run in its very short public life.
Yeah, the stock's up 100%, a little more than that actually, since the IPO in December, which is incredible because even at that time, there were some people who were afraid to touch it because the valuation looked high. This being fashion, there are concerns always that things can change on a dime, right? One day you're in, one day you're out. But it's not playing out that way at all. In fact, when the company reported this morning, sales and earnings blew away, both the guidance that was out there as well as what analysts were expecting. And
we're seeing that reflected in the stock price today, which is up 25%.
Right, exactly. So. It's hard. There's not really that much to complain about as far as how the company's doing.
Now, but you had mentioned though that this is fashion. Is this just an instance of having the right stuff at the right time, or is the company doing something different than other fashion companies?
Well, I think that you should remember that Michael Kors, the designer, has been around for 30 years, and so long before the stuff that's selling right now was out there.
People probably know it from Project Runway
right,
and stuff like that. So
yeah.
I'm sorry, go ahead.
No. So exactly. I mean, that's all part of it. I mean, before the company went public and before they started selling most of what they're selling these days, which is pretty expensive, a few $100s a handbag. It was runway stuff, and that's still out there, but that's not really how the company makes money anymore. What they've done is transform that into a brand that's much more accessible. Now, people like to compare Michael Kors to Coach. Coach has far more stores, 2 or 3 times as many in the U.S. Compared to Michael Kors, and so it's tough to argue they're going to run out of growth space anytime soon. So again, the only thing that I think you should worry about is how long can the company keep expectations at a level where they're going to blow them away, because at some point the market's going to figure out that the company's growing really, really fast, and if they don't hit what the market's hoping for, the stock could get hurt. I mean, it's trading at 50 times this year's earnings estimates, which is,
wow.
But you got to remember, Lululemon was trading like that for a long time, and the stock kept running. So it's really hard to, bet against the company for that reason.
It's interesting to bring up the Coach example because Kevin Kingsbury, in a market talk on Dow Jones Newswire today, noted that Kors has 1/3 of the market value already of Coach, but Coach has 4 times the sales of Kors, which is pretty interesting to see how much in favor investors are with Kors.
Well, I mean, I think that the reason for that is that Michael Kors is at a much earlier stage of its growth cycle, so that's totally accurate. But I mean, Michael Kors is just kind of getting into Europe and Asia. It's not making really any money there right now, but the sales are very strong. So, later down the road, that's going to be another question. Is that brand going to resonate over there as well as it does here?
And that was my question. So, in the U.S. is where Michael Kors is experiencing the most success right now, although growth rates are.
That's right. Yeah, it's growing.
Well.
Yeah, I mean, they're growing really. I mean, the company's growing very fast in Europe, but it's again, it's not earning any money there, and the vast majority of the sales are here. But I think that it's a little bit early to get worried about sales or profits coming from Europe, because things are going so well right here, and the store count is still pretty small if you think it's got as much potential as Coach does.
So do you think the Kors story is still attractive at this price point for investors to jump in, or have maybe has the stock maybe gotten a little bit ahead of itself?
I mean, I think again at this point you have to start wondering. You got to think about what the company's going to say next quarter and the quarter after that. I mean, when a company like this goes public, this is all very, very well planned out. They don't want to disappoint in any of these quarters. So chances are the company has got a feeling it's going to do much better than both what it's communicating in its forecast and what analysts are. These analysts themselves also want to be conservative. It's a complicated game.